What do you call a company that makes absolutely $0 in sales, but somehow has $2.5 billion sitting in the bank? Well, you call it Oklo. Welcome to the EDR brief. Today, we're cracking open the Q1 2026 Form 10Q from Oklo Inc., ticker symbol OKLO. We're taking this dense, highly technical SEC filing and translating it into a plain English explainer for the average investor. Let's get into it. First up, we've got to set the stage by looking at the massive scale of Oklo's war chest. $2.5 billion. That massive number represents their total liquidity. And if you aren't familiar with that term, liquidity is really just accountant speak for cash and things you can turn into cash by tomorrow morning. In Oklo's case, we're talking about massive piles of U.S. Treasury securities and money market funds. Honestly, to have this much cash on hand for a company with literally no revenue, it's extraordinary. So, here is our roadmap for today's explainer. We'll cover the business model, run through the scorecard, check their competitive moat, read between the lines, flag the risks, and give you the bottom line. Quick note before we jump in. We are independent, not SEC affiliated, and definitely not financial advisors. We use an AI-assisted approach to summarize these documents so errors can happen. Remember, this is a translation, not a recommendation. Always verify on sec.gov before making any money decisions. Okay, let's dive in. Section 1. The business model. Listen, you don't raise $2.5 billion to open a lemonade stand, right? So the core question for any business is, how does money actually come in? What's the mechanism for pulling real dollars into the bank account? Oklo is building advanced fission power plants to provide clean, reliable energy at scale. But how exactly do they monetize that? Enter their core product, the Aurora Powerhouse. I want you to think of the Aurora as a heavy-duty, highly sophisticated vending machine for electricity that runs on nuclear fuel. They aren't selling the vending machine itself, they're selling what comes out of it. Customers will essentially pay a toll for the power output, which Oklo estimates will be between 15 and 75 megawatts of electricity per plant. They build it, they own it, and customers just buy the power. So basically, Oklo is a massive power vending machine that makes money by selling electricity, recycled nuclear fuel, and radioisotopes for medical and industrial use. That's the dream, anyway. But right now we need to look at where the money goes. It goes into heavy capital expenditures, it goes into massive R&D, it goes into property and equipment, like the $89 million they currently have tied up in construction. It also goes into real estate, like their brand new ground lease signed in March 2026 down in Caldwell County, Texas. They're spending heavily today to build the infrastructure of tomorrow. Section 2. The scorecard. $0. That is their revenue. Are more dollars walking in the door? No, because, well, there is no door yet. Oklo currently has zero revenue. This makes them a classic tortoise or builder story. They aren't a software company that can just spin up an app over the weekend. They're building nuclear infrastructure. It takes years and billions of dollars before the first dime of revenue ever shows up. Because they have no revenue, we have to look closely at how fast they're spending their cash, and operating costs are showing a massive jump. Look at this. In Q1 of 2025, their operating expenses were $17.8 million. In Q1 of 2026, that number rocketed to $51.2 million. That is nearly a 200% increase year over year. Almost $27 million of that went directly to R&D, and another $24 million went to general and administrative expenses. They are in a phase of pure aggressive cash burn to build their moat. Now, if you glance at their income statement, you'll see an accounting net loss of roughly $33 million. But the actual cash burn from operations is $17.8 million. Why the difference? Well, it's because of things like $15.5 million in stock-based compensation. That's an accounting expense, sure, but it's not actual cash leaving the bank. Always remember, accounting profit or loss can be fiction. Free cash flow is not. Their actual cash flow proxy tells us they burned about $17.8 million in real cash to keep the lights on this quarter. So the absolutely crucial point is how they survive this burn rate. And the answer is that $2.5 billion safety net. How'd they get all that cash? A massive chunk of it came right here in Q1 2026. They used an at-the-market, or ATM offering, to sell 12.3 million shares of stock on the open market that generated $1.18 billion in net proceeds in just 3 months. So yes, they are heavily diluting shareholders, but they're doing it to build an absolute fortress of a balance sheet to survive the long years of building and licensing. Section 3. The moat check. So what protects Oklo from competitors trying to crush them tomorrow? What durable advantages are they actually buying with all this spent? First off, their primary moat right now is deep capital scale. Having $2.5 billion is a massive barrier to entry for anyone else. Second is their technology foundation, which leans on the historic experimental breeder reactor 2, a totally proven framework. Third, they're diversifying into radioisotopes. And finally, they're grinding through the Nuclear Regulatory Commission, or NRC, licensing process. Regulatory red tape is a total nightmare, but once you clear it, it becomes a massive moat, keeping everyone else out. Section 4. Reading between the lines. This is where we look at management's commentary to see where they're placing their bets. A major theme this quarter was a sudden pivot toward immediate diversification. See, while their core power business is still years away, they just dropped $28.4 million to acquire a company called ALCHEMY. They paid mostly in stock, about $27.4 million worth, with roughly $1 million in cash. Why? To jumpstart their radioisotope business right here in the US. They grabbed 2 in-process research projects, Abundantia and Meitner, aimed at producing critical isotopes. Management is aggressively buying their way into secondary revenue streams. And sitting right there on their balance sheet is another incredibly strategic move, a $25 million liability literally called a right of first refusal. Back in 2024, an unnamed third party paid Oklo $25 million upfront just for the right to be first in line to buy data center power from them on a 20-year timeline. This is basically a non-refundable advance payment for future electricity. It's an incredibly smart way to raise capital from desperate data center operators without giving away a single share of equity. Section 5. Red flags. Let's skip the boilerplate lawyer talk about asteroid strikes and focus on the real risks that could derail this company. The single biggest red flag for Oklo? Time. Just look at this grueling timeline. They have to finish tech development, then get NRC licensing approval, which is notoriously slow, then physically construct these facilities, and only then do they see their first commercial dollar. Any delay in regulatory approvals burns more cash and pushes their returns even further into the future. To sum up the risk here, they have to burn cash to build the tech, survive an absolute labyrinth of regulatory approvals, and physically turn on these massive vending machines before the money runs out. With $2.5 billion, sure, they have a lot of runway. But in the world of nuclear infrastructure, delays are measured in years and billions, not weeks and thousands. Time is their absolute biggest enemy. Section 6. The bottom line. So here's the final verdict. Oklo is a pre-revenue builder with incredible capital scale, over $2.5 billion in liquidity, and equally massive regulatory hurdles. Their main strength is that fortress balance sheet, funded by aggressive share issuance, giving them the ultimate luxury: time. The main thing to watch, their execution on NRC licensing, and whether that $28 million Atomic Alchemy acquisition can actually generate meaningful revenue before the core reactors come online. With $2.5 billion in the bank, Oklo has absolutely bought themselves a lot of runway. But in the grueling, decades-long race for nuclear dominance, is time the one thing money simply can't buy? That's your EDGAR brief on Oklo. Remember, this was an explainer, not a recommendation. Read the original 10Q on sec.gov if anything piqued your interest. Thanks for being with us today, and we'll see you in the next filing.